Hi friends, this is Kishore. Welcome back to my channel. Today I'd like to cover a lot of topics as FOMC meeting and a lot of earnings came in the last week, and also I'd like to share equity, BTC and US dollar seasonality charts. And this is not a financial advice, just for knowledge purpose only. Let's jump into the show. So the CNN Fear and Greed Index came great. We know that last couple of weeks it's in the greed and extreme greed. Let's see next month or next couple of weeks it will come back to the neutral or free. And this is weekly heat map for weekly heat map. Most of them are green, especially Amazon, Nvidia, and Meta. Meta is up more than 20% because of the good earnings, and Google is down more than 6%. And this weekly heat map for the ETF. Most of them are green. XRE regional banks was down more than 7%, and also the China indexes. Year to date performance of various futures: cocoa, orange juice, sugar, they went up more than 18%, and platinum, palladium, they are down because of the strong dollar. And this weekly sector performance, except energy and real estate, most of them are green. Energy is down because of the crude oil. And this is monthly heat map. Most of them are green, especially Meta 37% and Nvidia 39%, Microsoft 10 and Amazon 15%. Mega caps are all up like crazily. Only the Tesla is down more than 20%, beaten down, and Pfizer is 9%. And this is monthly heat map for the various ETFs. Most of them are up. Only the China is ETFs are still struggling to rise. And this is Max 7. Last year in 2023, this Max 7 performed really, really well. Maybe this year also the same thing. We do not know, but the Meta gave very good results, and also Nvidia. And this is January indicate trifecta. Like Santa Claus rally, it came negative, and first 5 days of January it also came negative this year. But the January it came more than 1.6% up. So when Santa Claus rally is red and FFD is red, if the January ends green, then next 11 months or full year is green or is bullish. And the same thing in the form of a chart. When January is up, next 11 months it is up by 10%, 10.4% on average, and next 12 months is up more than 11.2% on average. And this is Meta earnings came really, really good. They profit tripled in the fourth quarter, and also they announced the first time ever dividends. Because of that, it went more than 20% up on a single day. And this is top 10 biggest single day market gains. Yesterday, Meta, because of the 20% surge, it made 205. It added 205.3 billions to the market. And also all the mega caps like Amazon, Microsoft, and Google, all three mentioned the same. The cloud revenue is growing, and they are anticipating the revenue for the cloud infrastructure or cloud services will grow in this next quarter. As Amazon, Google, and Microsoft, they mentioned about the cloud. All the cloud-based stocks went up like Snowflake, Datadog, Elastic, Confluent, and MongoDB on Friday. And this is Apple. Apple results came bad, and their revenue guidance also down, posted down. So in the last 5 quarters, 4 quarters, they mentioned the decline in the revenue. One of the main reason is China. China is one of the biggest sales and revenue for Apple, but as China's economy is struggling, and IMF also mentioned for just 4.6% annual growth rate expected in the 2024, whereas in 2023 it is 5.2. So as China is struggling, Apple revenues and growth also struggling. And this Apple stock, it hit the right support level at nearly at 180 level. It bounced it there, but if it breaks, the next level is 170. Both MACD and RSA both are going down. So looks like it is breaking that. If it not break, that is good for Apple. Otherwise, it can go to the 170 levels. And last week most of the chip companies, they posted the similar kind of results. Like they posted good results are better than expected results for the December end quarter, but they gave the bad guidance for the March quarter. Only Nvidia, AMD, Broadcom, and Marvel Technology, they guided better results because they are on the ASI. And SMH, this is a semiconductor ETF. Last week I mentioned this is a shooting star kind of candle, so it can go down. So it went down and it closed around 191 and closed above the last week's high, but it did not cross that previous week high. So I'm still in the thinking it can go down. If it goes down, 180 level is the support level. And as we talked about commercial real estate struggling, so last week NYCB, it's one of the commercial real estate stock. It posted bad results, and the stock almost down 50%. In FOMC meeting, Fed holds rate steady indicates it is not ready to start cutting. We talked about this. It's too early to cut the rate cuts in the month of March. So they mentioned the same. And Jeremy Powell mentioned, during the Fed chair Jeremy Powell news conference, he said policymakers are waiting to see additional data to verify that the trends are continuing. He also noted that a March rate cut is unlikely, and we want to see more good data. It's not that we are looking for better data. We are looking for a continuing of the good data we have been seeing added. So if the same inflation data or the better than expected inflation data comes next couple of months, then they may look for the rate cuts. But till that, they are not looking for the rate cuts. And this is Fed Watch tool. So on the March, there is no way to rate cuts, and in May there is a 51.6%. Right now, it's showing the rate cut of 25 basis points. And this last week earnings, sorry, economic calendar data. So most of them are okay. One of the main thing I'm looking at is job openings and consumer confidence. Both came better than the expected one. Only concerning is Chicago business barometer, it came 46, but the expected is 48, and also it is lesser than the last previous one, 47.2. And also ADP employment, they look for the 150,000, but it added only 107,000 jobs. And this is next week economic calendar. One of the main thing I'm looking at the consumer credit, because last time it came 23.7 billion when they're expecting 8 billion, but this time they're expecting 15 billion. Let's see how much it will come for the January, but mostly it will come better than expected, because in December most of them spend a lot compared to the January. So let's see, will it be lesser than the 15 billion or not. And this is next week earnings. The circle one, or the one I'm looking at, like Caterpillar, is one of the for economic indicator kind of thing for me. And Palantir, Lily, Snap, PayPal, Spotify, and Phase, Paycom, Spirit, because the merger is cancelled with the Jets, so it was down a lot. So let's see how it perform in the guidance or the earnings. Expedia, FOM, Pinterest, and Cloudflare. So these are the one I'm looking at for the next week earnings. And these are the next week high volatility stocks for the earnings. Like I circled more than 20% ones. And this earning dashboard, nearly 230 stocks posted their earnings out of 500, so 270 are pending. So in that, healthcare, materials, energy, they posted the bad earnings compared to other sectors. And also in the revenue, materials and energy posted the bad revenue compared to the other sectors. And this is seasonality of Bitcoin. So we are here. So let's see in the after first week of Feb whether the Bitcoin will go up or will it go sideways. And this is Bitcoin chart. So it is going right now sideways right at the support level, 0.5 Fibonacci level. So if it we stay there, it's okay. But if it breaks, then it comes to 35. But if it goes up, 48,000 is the next resistance level. And this dollar index seasonality chart, in February it do dollar performs well, means it goes up. Mostly it do well in the September, and then after that, February is the month where it goes up a lot. So if it goes up, it impacts some of the commodities like gold and palladium, platinum kind of thing. And also this is dollar index. So it right now it's at the resistance level at 104. If it breaks, then 105 is the next resistance level, and the support is 102. And this is election year seasonality pattern. So all the dotted ones are the election year. So if you see here, Russell, now we are here. So if you in the next 5 days, the I see blue dotted line, Nasdaq and the Russell is going up, and other three are in the flat. And this 2024 trading calendar, Feb and March. From 16 is the OPEX day for February. From this week to the March quad witching on 15, till this 1 month, market can go down or go sideways. Mostly it can go down because based on the seasonality pattern, and also some of the charts showing some of the negative divergence. So the SPY, it's a weekly chart. Right now it broke the 480 level, and it's at 494 level, and my support is 480 and resistance is 500. And this is number of number percentage of stocks above 20-day moving average in the S&P. So right now it is at 57. If it goes 86, that's a signal to sell, and if it comes to the 14, that's a signal to the buy for me. And this is percentage of stocks above 200-day moving average in the SPY. So this is also almost very close to the top of my range, 76. So right now it is at 70. If it hits 76, that's a good sell signal. And this QQQ, it's a daily chart. It hits the trend line and then bounce it. That's a very good one. I like to see whenever the trend line or support breaks, it retests and goes up. I like that kind of pattern. And this is my last week targets. We perfectly hit 429, and right now it is at 429. And my coming week support and resistance are 424 and 431 levels. And this is IWM daily chart. So it again came back to the 194 level, but looks like there are no rate cuts on the March, so it can still can go down because it again came back to the within the range. So if it breaks 190, 194, then it can go to the 190 level, and if it breaks 190, then again 187 is highly possible. And the summary is mega cap stocks lead the market to the new highs. Yes, as they posted very good earnings, market went up and liked and they went up. And no rate cut may hurt the small cap stocks because of the rate cut the cancelled on the month of March. So small cap stocks hurt a little bit because of this one. And AI ad and cloud stocks are in focus for this year. As we see, Amazon, Microsoft, and Google, they all posted good cloud guidance. So I'm thinking cloud stocks will go up. And a positive January has been bullish signal for stocks. So when the January closes in the green, as January goes, market goes. So January close gain. So this year is considered as a bullish year, mostly based on the seasonality pattern. Will Bitcoin follow the seasonality and rally in Feb? So we saw the seasonality pattern from the Bitcoin. The first week of February, it can go up. Bulls be cautious from Feb apex to March quad which day. So based on the seasonality from opex of the Feb to the quad witching of the March, market can go down. That's all for today. Hope you like this video. If you like this video, please hit the like button. Please watch more videos in my channel. If you like them, please subscribe. Please share this content if any of your friends similar kind of content, and please hit the bell icon so that you'll get notification when I upload a new video. Thanks so much. Bye bye.